Stock market is dropping, and this is why. What's going on, team? It's Ricky with Tactical Solutions. Hope that you guys are all having an amazing Tuesday. We killed it within our Learn Plan Profit group today. I'm going to be sharing my screen so you can see exactly what it is that I'm looking at. But let me go ahead and pop this up. This is SQQQ. Even when SQQQ is barely in the green, I reduced my position size and I scalped the bejeebers out of SQQQ today. It's not something that I actually do very often. I actually wouldn't recommend it if you're an absolute beginner. It just had such a consistent pattern with the general support range right around the lows of $39, and the overall highs of anything near $39.80 was a very common resistance level. You can see pre-market, you can see right when the market opened, you can see hours after that we just continued to hit that 39.80 price point, and it would act as a resistance level. So not much progression for SQQQ, but because of my position size and because of how aggressive it was that I was trading it, I made 2% today. 2% when the overall actual ETF barely was in the green. So I made $7,800 profit. I reduced my position size now down to 4,000 shares, and I will be holding that overnight into tomorrow's pre-market session, and we'll see during our live trading session how it actually goes. But why? Why was the market so choppy? So this is the third red day for the overall markets, right? NASDAQ, S&P 500, the two major markets, then there's the Dow Jones, right? But why? Well, one of the things that originally didn't act as a negative catalyst, but then followed up with, a little bit more of a sell-off is the new home sales. If you guys watched our earlier video today, we quickly talked about how in the past month over month, home sales for new properties are down 12.6%. But if you take year over year, we're actually down nearly 30%. And on average, year over year, a property is actually almost 10% more expensive now than when it was a year ago. And think about it. Interest rates are now double of what they were last year. And now prices are more expensive. And of course, people are buying less. So this is not a good sign for the overall housing market. Things are beginning to slow down. And the reason I wanted to share that with you guys is we have a lot of you guys that are thinking about buying a house. Now, if the house is a killer deal, deals are deals and we're deal hunters, right? I'm here to take advantage of any opportunity that is presented to me. But because of this data and what it's showing me, interest rates are going to continue to rise. When it comes down to these property values, they're very, very inflated. So this just tells me that less people are willing to buy because of these interest rates and more properties are being built. And this only means that they're going to have to lower their prices, meaning that we can be less aggressive with making cash offers or making offers altogether, and making sure that, now we turn this into a buyer's market where there's more of an incentive for us. Because, later or years down the road, we can always refinance. Now, one of the things that I quickly did want to chat about is tomorrow, one of the main reports, other than the EIA crude oil inventory reports when it comes down to oil has been more important now for the past couple of months than before. And the reason why is because obviously a big sector in the CPI data report that is, of concern is oil. So oil inventory is obviously something that you're going to want to pay attention to. This is going to be 1 hour before the market opens. I want to make sure that you're aware of that. And also durable goods. Durable goods, this report will be announced if I'm not mistaken, 1 hour before the market opens. So there's going to be a report 1 hour before the market opens and 1 hour after the market opens that I think is the most important. There's also a report 30 minutes after the market opens that is pending home sales. Now, I don't really think this one is as important as the one that we had today. And the reason why is, well, again, a lot of you guys know that we buy and resell houses. We flip properties in the Arizona market. 1 out of every 5 properties right now in the Arizona market is falling out of contract. It's either because in fear of the uncertainty of a recession, or it's just because of interest rates, right? It's just not as attractive to buy a house than it was a year ago when interest rates were really low and everyone and their mother were buying a house, buying two, because it was just so cheap to borrow money. Now it's quite the opposite. So just be aware. My job is here on YouTube is to make you aware of what reports are set to be released. And of course, it can have an overall influence on overall markets. Now, that is obviously more of a concern for day traders, not so much for long-term investors. So regardless of how the market goes, bullish or bearish, if you're a long-term player, just understand that, again, your vision should be long-term, not caring about the intraday volatility. One of the things that I do want to talk about is when is this 3-day green streak going to end for SQQQ. So SQQQ has been the ETF that I've been trading this week and as of last week. We've talked about, right? We've been preparing for this, where QQQ is the bull ETF, right? This is the one that has been performing very, very well as the market began to make a recovery shortly after tech earnings, right? And that better CPI data report. We hit this moving average as a resistance level. We've retraced back. We have still not broken below this EMA line on the day chart. This is very significant. I know some of you guys might not be into technical analysis, but this is very specific. We got rejected by the moving average. This will determine if more selling pressure will follow if we break below the EMA line, or it would be a very, very good sign if we establish a support level here and we begin to make our recovery. That would be progress, that would be higher lows, and that would be a step in the right direction for the market to potentially recover to previous highs. So I'm very excited. And in the next couple of days, we should know. We should know if we establish a support at the EMA or if we break below and if we're headed all the way right back down to previous lows. So I'll keep you guys up to date. All you have to do is subscribe and turn on your post notifications. And if you have any questions about what we talked about today, all you literally have to do is send me a direct message via Discord and I respond to all of my direct messages. That's that first link down below. And yes, of course, it is for free. It's one of the things that I try to do here on YouTube is I try to make myself the most accessible as possible. Just give me time to respond to your message. And if I don't respond within 24 hours, just send me a period so it bumps it right back up to my notifications. I really do appreciate you guys' time. If you guys have any questions about being able to watch me trade live as soon as tomorrow, I trade live every single morning right at market open with my Learn Plan Profit group. So if you've ever wanted to see what it's like to see me buy, see me sell, my thought process behind a trade, managing my risk, I do this every single day live. Click the second link down below, learn a little bit more about our Learn Plan Profit group and see if it's a good fit for you. If you have any questions, shoot me a message either via Discord, first link, or via Instagram, third link down below. I really do appreciate you guys' time. I'll see you at the TechBuds HQ, which is located in Chandler, Arizona. And like always, let's make sure that we end the year on a green note. Take it easy, team.